In this presentation, we will take a look at the adjusting entry related to insurance using our simple QuickBooks method, our cash basis QuickBooks method. For more accounting information and accounting courses, visit our website at accountinginstruction.info. It is possible for us to do the adjusting entry related to insurance, but it might be best for us to leave that separation and just record the insurance as we have been and then let that adjustment be done by the end of the year tax preparation and or accounting firm for financial statements, because it's possible that the insurance treatment could differ depending on what the needs are at the end of the year. So it might be best for us to just say, hey, this is the insurance, here's how we recorded, here's the insurance policy, here's the time frame covered, and we're going to depend on you to make any adjustments if needed to change them, either to a cash, if it's not on a cash basis, to a cash basis, or to an accrual basis. So for example, we're going to take this example here where we have a 12 months starting November 1st for the insurance coverage. We paid for the insurance coverage. We typically pay before. Now, of course, we only had 2 months of data, so we paid in January or February, and we're going to say that the insurance coverage doesn't start until November. We don't usually pay that far before, but the point is that we usually pay the insurance before we actually get insurance. We always do. That's the point of insurance. So we should be allocating this out in terms of when we use the insurance as opposed to when we pay for the insurance, because that would make more sense from a comparative standpoint. So let's take a look at this in terms of our financials. We're going to open up our QuickBooks Simple file here by going to the QuickBooks Data Files, QuickBooks Data, and we'll open up QuickBooks 1 and that QuickBooks file. And then we'll also open up the information in terms of our trial balance. We're going to go to the Docs and open up the 2019 and take a look at our Adjusting Entries worksheet for Q1 information and see what this adjusting entry would look like. Here is our home page. Open Windows Open, View tab, Open Windows List, how to open them. If we go to Reports up top and we go down to our accounting and taxes and open up the trial balance, we're going to change the date range from 01/01/19 to 12/31/19. And now we're going to take a look at the insurance information. There's two ways we could have entered it. We're just going to enter the full payment when we pay it. We can either do that as a prepaid insurance, or most people would probably just call it an insurance expense. So when we paid it, we said insurance expense, $12,000. Now, if we look at that, if we double click on that and take a look at what happened, then there was a check written in January for $12,000, and we just wrote it to insurance expense. And again, that makes sense from a cash basis standpoint. However, from an accrual basis standpoint, that makes January look very different than other months. Now, to understand this basically at the end of the year, because we're saying our cutoff is the end of the year, December, we could make this payment for insurance anytime during the year. It could be 12 months of insurance that we started in our case, November. We're going to say it started in November. And that's so that we have a different cutoff, so this makes a bit more sense because we only have 2 months worth of data and our cutoff is December. So we're going to say, in other words, that we made this payment of $12,000 for an insurance policy that doesn't start until November, because then we have those 2 months, November, December, and then the end of the year at the end of December. And so you can see what would happen there. It's the same kind of idea if we had paid it in January and it covered February and on after that point in time. The payment was made here, but there's a timing difference. That's going to be the issue that we have. Now, under an accrual method, if this was paid in January and we compared it to February, it would look like January looked really bad, and it doesn't, because January just happened to pay something that January's not benefiting from it yet. It's paying for something that's going to benefit sometime in the future. So it's not really fair for January's results to have it there from a bookkeeping standpoint. From a tax standpoint, the question is, when do you get to deduct it? Do you get to deduct it when you paid it, or you get to deduct it when on an accrual basis? So those are our issues here. If we're going to an accrual basis, which is kind of like the normal financial statement process, then we would have to make an adjustment. Now, if it's in insurance expense down here, we'd have to determine how much of that $12,000 was in the current month, in the current year in this case. If we're saying this is an entire year and the policy started November 1st, so November, December, 2 months, and it's going to be a 12-month policy, then we're going to say, okay, well, you paid $12,000, and I would do it this way, divided by 12, that's $1,000 a month, times 2. So that means that $2,000 of that $12,000 should have been in the year 2019 for November and December, and the rest of it should be in the next time period, the next cutoff. So that's just an idea of the type of adjustment that would be made. But again, that would only be made if we're talking about an accrual basis adjustment. That would make sense from a financial statement decision making. From a tax standpoint, it may do something different. Therefore, it might be something for us. We just say, hey, there it is. Here's the policy. Do with it what you will if you need to do anything to it. We have it currently on a cash basis method. On an accrual method, we would have to basically change this $12,000 down to just 2 months worth, which was that $2,000 we calculated. And the difference is going to go up to prepaid insurance. So let's think about that. This $12,000 needs to be $2,000 in essence. So we're going to copy that. I'm going to put this over here, right click and paste 1, 2, 3. It's on the credit. That's why I skipped 2 lines. And it's going to be, what do I need to do to make that $2,000? I got to decrease it by $10,000. So this would, in essence, be, if I put the debit up here, this equals the $12,000 minus $2,000. That's the $10,000 we need, debit and credit. The debit is going to go to prepaid insurance. So that's going to be our journal entry. And in essence, we're going to get this down to what was actually consumed in the 12 months, if it was November and December, which was covered, which is 2 months of this 12,000, which is a year's worth of coverage. So we're going to say this equals then this 10,000 credit, bringing it down to 2,000. So that decreases that increases net income. So it decreases the expenses and increases net income. And then we're going to go up top and we're going to go to prepaid insurance. This equals the 10,000, enter. So this is what we're going to consume. We don't have to pay insurance for 10 more months. So we have an asset that's going to help us in the future. So that's going to be our transaction there. If we did that in QuickBooks, we can do that in QuickBooks, same thing. We'll just go to the company and we would go to make journal entry. And the journal entry will be as of 12/31/19, and it's going to go into prepaid. Now notice it's not there. I don't have any prepaid insurance. So I'm going to make it prepaid insurance setup, and we're going to make it an other current asset type of account. And that's what we want. It's going to be for 10,000, and we're going to call it ADJ insurance. And I'm just going to copy that, put that down here as well. Other side is going to be to insurance expense. And that's it. And we'll save and close it. And then we'll have our insurance expenses now 2,000. And the prepaid insurance up here is the 10,000. So we should be lining up there. Now we'll take a look at the more complex method. And the only difference is we did kind of the more traditional method on the more complex bookkeeping, which is to first put it into prepaid insurance. That's kind of the more proper way we're supposed to do this, and then adjust the expense portion of it. For more accounting information and accounting courses, visit our website at accountinginstruction.info.